Hello, guys. How are you doing? Trust you guys are doing great. Welcome to this amazing session. First session of the early trading course. Super excited to have you guys here. How are you guys doing? So I can see Mr. Augustine saying opening prayers. Wonderful. So we're just gonna wait for everyone to get ready to join us and basically just get ready to join us. So, but wherever it is you're reaching out from, please don't hesitate to just let us know. Let us know where it is you're reaching out from. Let us know where it is that you're reaching out from. What part of um, the world are you reaching out from? Really, let us know. Let us let us know. Let us know. I am super excited to facilitate this. The early trading course is provides a very strong foundation and a pathway for anybody who's looking to learn how to trade the financial markets. So let us know where you're reaching us from. Okay, wonderful. All right, glad to be here. Thanks, Sovereign Market, for this great opportunity. Excited. So let's just have give a little time to wait for everyone to just get connected so we can get started with what we have here for us. What we have here for us. So wherever it is that you know you're reaching out from, just put up a notification. Hey, I'm reaching you from where, whatever part of the world it is that you're reaching us from. Just put it up there, and I'm going to put it up on the broadcast and let everyone know that you're here with us and you're reaching us. Okay, lovely. Mr. Sunday Slyman says you're reaching us here from Nigeria. Elori, good evening. Good evening to you. We promise that you're going to have a lot of value today. Um, okay, I can see Mr. James here who's reaching us from Kano State. Beautiful. Uh, Mr. Josh here from Enugu. Wonderful. Super wonderful. Okay. All right. So this is super exciting. So just keep the comments coming in. Very shortly, we're going to get started into the session. And we have a lot to share actually. Useful whether or not you've tried out trading before or you are actually new at trading. We can see Mr. Aldo Ismaila Onusche who's reaching us here from Lagos. How's Lagos doing today? How's Lagos doing today? Wonderful. Just super wonderful to have everyone here. Okay. Reaching from Lagos, Southwest Nigeria. Yes, southwestern part. Wonderful. Okay, so very shortly, we'll just be getting into the session. We're just going to get into the session where we begin to talk about these foundations of what is required to be excellent in trading. Now, literally everybody knows that if you're able to learn how to trade successfully, if you're able to, imbibe the skill, grow the skill, and be excellent at it, it can become an amazing source of side income for you. I mean, a lot of people right now actually require that because we're having increase in the cost of goods and services as a function of Nigeria's poor, and the naira taking the beating. So of course Nigeria is a hugely import dependent economy. So what you have is so many things that people buy, the cost of goods and services increase, and then you don't have the commensurate increase in the income of families. Now that's a challenge. That's a challenge for a lot of families, but a lot of the families that are able to manage to earn in dollars find that they can now sort of balance that, and that's one of the biggest advantages of learning how to trade successfully. You get to be able to make an income outside of your own individual economy, and that's what I'm gonna get started with explaining to you today. Okay, so in the next 1 minute, we're gonna get through. All right, Mr. Sylvester, you're reaching us here from Abuja. Okay, wonderful, wonderful, wonderful. So we have spread from the east, west, and different parts of the region. Now, before I actually, before we kickstart, let me talk to you a little bit about this platform, this company, that Swavely Markets. Swavely Markets was created to provide education for people who want to access opportunities in the financial market. And one of the ways in which we are able to achieve this is by leveraging technology. Now, traditionally, a lot of people wanted to learn would require somebody sitting right next to them, or to attend a seminar or the likes. And that's usually very challenging. It's not very efficient. If you wanted to start learning today, you might not be able to access the information because, hey, you're waiting for the next time a full-fledged program is organized. And that's why we have this, because with technology, you can reach out to mentors, you can reach out to folks who have more experience, and they can actually bring you up to speed, you know, in the comfort from the comfort of your homes, from wherever it is you are. That's the beauty of what we're doing here at 12 the Markets. All right, so let me ask a quick question. How many people here, have some experience trading? If you know you've traded before, whether in the Forex markets or any form of trading, whether Forex, stocks, commodities, right now, cryptocurrencies are a big rave right now. Of course, I mean, everyone is talking about what's happening with Bitcoin right now, the huge volatility that's present in it. If you've traded any of these assets before, just please put a comment in here and say, hey, I've traded Bitcoin, I've traded a stock or stocks before, I've traded cryptos. I want to get a sense of what kind of experience we have doing this. I want to have an understanding of if we're experienced. And that's going to help us navigate as we go into the early trading course. So yeah, so you can put up those comments. If you know you've traded before, you can put it up. And just state quickly what you have traded, what kind of assets you have traded. All right. If you've traded anything before, put it up. I want to imagine that we should have a good blend of traders and people who have some experience trading and people who don't. All right. Okay. So while we wait for that, I'm just going to begin just sort of delve into the actual what we're actually expecting to see. What we're actually expecting to see. So as I wait for those comments, let me just again remind us that this is being facilitated by Swavely Markets. Now, I am the lead faculty here at Swavely Markets, but I lead an amazing team of market analysts, technology providers, talented people who bring their resources together to be able to help you better understand and be successful at the financial markets. So let's get started with a little bit of background. Who am I, and what can I share with you? So I'm the founder and chief mentor at Swavely Markets. I've got over 10 years of experience trading, over 5 years of system and quant trading experience. I've been a market analyst at A to Z Forex. I've been part of partnership. I've actually worked in a number of roles within the financial markets. I don't want to bore you with that. But one of the things I'm excited about is the fact that I've had over 5,000 traders, would-be traders or existing traders, people who have an interest in being successful in this market. I've been able to impact with my knowledge, share insights that has taken me a long time to have with them, and with international events in different places. So traditionally, I've had the opportunity to speak to and to coach and mentor a number of traders from like different parts. So one of the beauties of, would I say, the COVID period is that it kind of helped us to understand that, listen, we don't have to sit physically opposite each other. You don't have to sit in a seminar for you to actually glean and have the knowledge you require. You can be right there in the comfort of your home, and you get the knowledge that you actually require. So a little bit more about Swavely Markets. So what we do is we provide professional trading, education and mentorship. So and we do it very creatively. We do it very creatively. As we go along, I'll share with you some of the work that has been done on this platform to make it easier for people who want to become successful, to learn, to participate, to partake, and to be successful. All right, so we provide ongoing resources for traders, signals, tools, whatever we find that will be of use for you in your trading journey, whether that's whether that's information, whether that's whether that's a tool, whatever it is that we find that is useful, we continue to spend time researching and provide at it. So we provide custom publications and research. We also facilitate a community support for traders. Now, as a platform, we have a number of people come together, and in the middle of that, what you find is that you are able to develop, not just even from the direct mentors of Suavely, you're also able to develop from associated mentors. Now let me just mention very briefly about Suavely Capital. This is a sister company of Suavely, which basically offers capital management services, which essentially involves, if you have capital, don't have the time or the skill to trade, we can take that responsibility, and there's systems associated with that. So we develop custom portfolios suited to clients' risk reward appetite. All right, and alternative asset diversification for traditional investors. So traditional investors like to invest in things they're very familiar with. We're talking like real estate. We're talking, to some extent stocks, but moving away from those asset classes into other, sometimes, significantly more performing asset classes. Especially if you have the skill, we help folks we also consult in that area. Now let's talk about, why do we trade the market in these times? Why is it important? Now, trading, when you're trading, you have a cash asset which is available on demand. What does that mean? Now, there are a number of things that a person can make a part of his capital. Of course, one of it is you can make, for instance, you can make real estate a part of your portfolio, your financial portfolio. As a family, you can sit down and make that asset a part of your financial portfolio. But what's the challenge? The challenge with that is that if you wanted to liquidate that asset, it might not exactly be easy for you. Okay, so you have some people who have a huge net worth, but when they require cash to do something, it becomes very difficult for them to generate that. Now, one of the big advantages of trading is that whatever capital that you have in there, it's not difficult for you to liquidate that into cash. And cash is king ultimately when it comes to investment, because at the end of the day, if you want to quickly purchase an asset that is at a low price, okay, you require cash for that. So having that cash fluidity is one of the great advantages. One of the reasons why people trade the markets in these times. Of course, a lot of families require alternative source of income, and I realize that not enough families are actually taking it serious. Not enough people are actually being proactive about this. Now, traditionally, most people exchange time for money in the form of a job, or in the form of, even a business that you have to constantly, be tied to. Okay, you are exchanging time for money. One of the beautiful parts of it is that you can have an alternative source of income trading the markets if you get very skilled at it, and you're going to be in that situation exchanging your knowledge for money. Another exciting reason why you should be trading, okay, that's if you're new, that's if you don't know about Forex, that's if you don't know about the financial market. One reason why you should be trading is because risk is totally in your control. What that means is that a good trader should understand how to quantify the risk on any position. It's actually not difficult. It's a very simple thing to do. Okay, people who don't know about the markets often look at it like, oh, something super risky, where risk is not, people can't control it. The reality is that if you get skilled as a trader, you can't even call yourself a trader until such a point where you understand how to quantify risk, to apply money management and risk management with, precision, as a matter of fact. Like, you're not just, doing it. So that is a good thing. risk is totally in your control. Another reason is when you spend time learning it, it's yours for life. It becomes a skill for life. Nobody can take it away from you, irrespective of what part of the world that you find yourself in, irrespective of what situation you find yourself in. You should know that if you have the skill, you can always approach the market and seek to obtain profits from your knowledge. Now, that's for me. That's one amazing thing. So it's also critical for general investing knowledge. The other day, I was talking to a friend of mine who was a banker and just sharing about risk management, and he was absolutely amazed at the depth of knowledge that I had about managing risk on loans, for example, where it was super amazed at that. You know how I come to such knowledge? I come to such knowledge because I trade in financial markets. I come to such knowledge because I trade in financial market. I was telling him, listen, if you're going to start a business where you're giving loans, because this particular banker friend of mine was looking at starting something like a microfinance bank, and so I was giving him tips on how he should ensure that whatever risk is taken when he's giving out those loans should not exceed a fractional percentage of the account. He should ensure that it diversifies across sector. What I mean is, don't give loans just to market women within who are selling a particular kind of product. In that sense, you are exposed to industry risk. I'm just sharing with you, like, it was amazing because this individual was really, really surprised that, wow. But you know how I got that knowledge? I got it from trading in financial markets, because if you're going to be excellent, you have to understand risk management. Now, the returns far outweigh inflation, potential returns, that is, far outweigh inflation. Inflation in Nigeria, it's at stupendous levels. I really don't care about what the people who, punch these numbers, what they say. But the reality is, you only need to go to the market, then you understand just how high inflation is. Inflation in Nigeria is at ridiculous levels. Okay, for me, I probably place those numbers at in excess of 30-40%. The reason is because when you look at year on year, real inflation, I'm not talking about the one that, the figures that I just published. When you ask yourself, what was the cost of a bag of rice a year ago and what is the cost right now? These are staples that filter in. What was the cost of the naira to dollar, which filters into maybe like 60-70% of whatever it is that is coming into the country? What was the cost of, because when you have like the exchange rate slide like that, what happens is everything that is coming into the country becomes more expensive. That becomes an inflation that filters into every sector of the economy. So the reality is, traditional investments, like you want to put the money in fixed deposits, you want to put it in treasury bills, yields, they don't really generate much. Yields per year for that now is less than 3%. What that means is, if you have $1 million in one of those services, for instance, like treasury bill and the likes, you will struggle to get more than like 20,000-30,000 naira in a whole year of investment. Now, if you're trading in financial markets, the potential returns far outweigh inflation. All right, guys. So let's talk a little bit about the financial markets. We're actually getting into the actual training. But before I go, I just want to check that everyone is following me. So I'm going to stop sharing for a little bit. I'm going to stop my screen share for a little bit. And okay. So just to check, okay, I can see our numbers are actually increasing. Wonderful. So some people are saying, hey, yes. So I'm just going to go back a little bit to just take some of your comments. Mr. Sunday Slyman is saying, yes, you trade crypto, you trade Bitcoin, Litecoin, wonderful. I traded currency before, but I lost. This is unfortunately not a strange occurrence, quite honestly. And the reason is just simple, because if you don't have the requisite knowledge to be successful, you will simply just struggle. That's the truth. It takes you to approach trading with a certain way, and you have to be very serious and disciplined with it. It's not like it's not just a game. You have to be very serious and disciplined with it. And if you are, the success is guaranteed for you. So I can see, okay, Anthony from Benin. So I'm just taking a couple of your comments right now. I'll return back to our session just in a moment. Okay, so keep the comments coming in. If you have any questions as I go along, because I want the session to be very fast. So I will just basically go along like this. So I introduce you into the financial markets. Okay, now listen, the financial markets is any place where you have buyers and sellers come together to trade financial assets. Now, those financial assets might be stocks, precious metals, forex, commodities, derivatives. Now, this is, you can think about this like the theory of the financial market. In practice, okay, what it looks like is I'm going to stop for a moment. Okay, I'm going to stop sharing for just a fraction of a moment and just share what a trading platform looks like. Okay, I'm going to share what a trading platform looks like. All right, guys. So yeah, so as an example, I hope you guys can see the screen right now. So in the financial market, I don't mean to scare anybody about all of this, but I want to get as close to the market as possible. So in the financial market, you basically have like a number of different things that you can trade. Okay, so you have a lot of all this. You can think about them like assets listed as somewhere, and then there's now the opportunity to either sell or buy these particular assets. Okay, now the price of this asset change over time. Now, what a trader is supposed to do is to come to an understanding of whether the asset price is going to rise or whether the asset price is going to fall. So for instance, this particular asset right now, this is a currency pair. You can see that the prices are going up and down. But the real opportunity to make money is when you have the skill set, okay, to as correctly, as frequently as possible, correctly. Now, it doesn't mean absolute. I mean like as frequently as possible, correctly position for either a rise or a fall of that particular asset. Now, this is like the simple, this is basically the simple way in which the financial market tends to work. So how then, what is the theory behind how something like that can happen? Now, what is the theory behind that? That's what I'm going to try to explain with my explanation up here on the slide. So we have a place where you have buyers and sellers. Now, the thing that they are trading, in which the prices are changing, okay, just like the chart that I just showed you right now, would be stocks, metals, forex, commodities, derivatives, okay? So when we talk about stocks, we're saying you can actually come into this financial market and trade, for instance, Apple shares, or you can trade Microsoft shares, or you can trade IBM shares, or shares of global companies all around the world. You can come and trade gold, for instance. As the price of gold goes up and down within the global market, you can trade forex pairs, like the way you have currency pairs. You can trade a commodity, like crude oil and derivatives, on and on like that. I'll give you a simple example of a lot of those things. But a question you want to ask yourself is, why do you want to start out with the forex market? My first answer is, it introduces you to the financial market. The next thing you want to do is you learn principles that are applicable across multiple asset classes. And risk is totally in your control. Another good reason why trading forex is good is you can profit in rising and falling prices. Now, I've heard so many people say stuff like, oh, did the forex market crash or something? Whenever you hear something like that, there is a fundamental you can already understand that there's a fundamental gap in understanding of how this works, because in the forex market, whether the price is rising or falling, okay, you can actually be profitable. The only difference is you need to be in the right position of that particular move. Okay, so you can do what you call short selling, where when the price is falling, you're actually profitable. Now, a lot of people, for instance, who trade Bitcoin now, we all saw the surge of Bitcoin, remarkable surge, went past 30,000, 35,000, on and on, beyond those numbers, and then lost almost 20% of its value, came down. The interesting thing about that movement of Bitcoin is that if you were trading it through, for instance, Forex platforms, even when the price falls, if you position to profit when the price falls, you actually profit when the price falls. So that's something interesting about, and hopefully we get to be able to show this, how this actually happens. It's also critical for general investing knowledge. Again, it provides cash on demand. Hey guys, so let's talk quickly about what a traditional commodity exchange is. So we have a commodity exchange that has a buyer and a seller. Okay, so now what happens between this buyer is that there is a price, and this price is not set by either of these parties. Okay, what is responsible for this price is the perception of value exchange between both buyer and seller. So one drum, for instance, equals to $17 in this example would mean that the market consensus in that particular environment is that, okay, the value of a drum is equivalent to $70. Now, so understand that in the financial market, what actually sets the price is independent of buyer and seller, in the sense that of that one buyer or that one seller. What sets the price is the totality of buyers and sellers in the market, which is the full spread of the market. Okay, so we have. So what happens is for there to be an exchange, this buyer has to believe that this drum is going to rise in value over time. That's why he's going to buy it in any case. Because what happens is people buy or sell in the market because of a perception of increased value of the asset that they hold through time. Now, I'll try to say that again. The only reason why anybody buys anything in the market is because you feel like, okay, well, after a while, that particular asset will increase in value. Now, when you think about it in that sense, what happens here is if this particular buyer who has this kind of money, before he parts away with this, he has to believe that this drum is going to rise. So he parts away with it and gets the drum because his perception is that the drum is going to rise in value. Now, if the drum rises in value over time, this buyer makes money. However, if the drum loses value over time, the buyer loses money. So what now determines which of these two parties make money, okay, which of these two parties gets profitable, is what happens in the larger market. Now, so when you understand it from a perspective of traditional commodity exchange, you can easily see that profitability is a function of which particular asset you are holding through time and what the market is saying. So let's give an example. In this particular example, let us assume that the drum actually increases in price to 110. Because the buyer was the individual who held this drum through time, he becomes the person who goes on to make money. So now this is just a general concept of trading. So in trading, you have buyers and sellers coming together to trade value, essentially value, and who makes money is now a function of that the price of both assets that are currently being traded. Now, and that price in itself is a function of the market on the outside. Now, this will get simpler when it gets into an actual sort of live market environment. But this is just the fundamental concept in traditional, using an analogy of traditional commodity exchange. So as you can see here, the drum is the asset of value for the buyer because that's what he holds through time. That's what he has exchanged his money for. Meanwhile, the USD in this example is the asset of value for the seller because he has given up his drum in exchange for the USD. So at the end of the day, his hope ultimately would be that this $70 that he gave up for the drum actually rises in value. But of course, that's not what happened according to our analogy here. What happened here is the drum rose in value, okay, because it was $170, then got to be $110. All right. Now, if we take this analogy to a currency exchange, where we have a buyer and seller, okay, where one buyer comes in and he has a dollar and the other seller comes in, the principle still exists. In order for any of these parties to agree to an exchange, the buyer must believe that he must quest to have what is on the other side, which is the euro. He must believe that by giving up this dollar, in order to have the euro, and accepting the euro, then the euro will rise in value over time. So what drives trading decision is a perception of what will rise in value. Now, the same thing is true for the seller as well, because for the seller to actually agree to give out the euro, he too must be convinced that the dollar will rise over time. So the motivations of both parties in this transaction are similar. Both of them have to believe that these assets that they're giving up will actually rise over time. Now, remember I mentioned that what determines the exchange rate between both parties might not necessarily be the buyer and the seller, but it's actually the larger market outside of the buyer and the seller. So to sum it all up, in this example, we're assuming an exchange where 1 euro goes for $1.1950. So that means that the euro dollar price is what you have here. Okay. Now, if an exchange is done, that is the dollar, okay, the buyer gives off the dollar in exchange for the euro, who makes money will now be dependent on what happens with this exchange rate. That is, who makes money over time will be a function of what eventually happens, which of these two assets rise relative to each other. So after the exchange is done, who makes money is a function of what happens outside of both of them, what happens in the larger market. I'm still talking about like the basics of trading, like this thing called trading, this online trading that everyone's talking about. What really is the basics of it? And this is really the foundation of it. Trading is about exchange in value. People come into trade to buy or sell different financial market assets because of the fact that they want to hold an asset that would increase in value over time, and as such, be able to profit from that increase in value. So in this particular example, what determines whether the buyer or the seller makes money is what now happens with the exchange rate. Okay, so I'm going to again assume that this particular exchange rate rises. So what that means is ultimately you have 1 euro rising to become 1.3050. So at the summary of it, it gets to be evident that the buyer who is holding this euro that has now increased in value becomes the person who's profitable. Okay, guys? So now, in summary of it is, you begin to understand that if you have the ability, if you are able to build the ability to trade, okay, you can now be able to pick up different assets that will rise in value over time. Now, there are a number of ways in which you can succeed at doing this, but one of the most popular ways in which people do it, this is what we call technical analysis, and we will share with you how this happens. So just taking a very short comment, I can see here Mr. James from Port Harcourt says, I have lost money too. Now, I'm going to share with you, after this basics of trading, I will share with you some of the key reasons why a couple of people lose money and some of the ways in which you can ensure that you don't get into that category. Okay, guys? So, but before we do that, let me just take a couple of those comments once again. Somebody says, is there a way to determine if the euro will rise or fall, or if the dollar will rise or fall? Now, that's a very good question. As a matter of fact, that is the whole object of trading. How to determine which particular asset will rise or fall. Now, I'll give you, because I can sense there are a couple of people who are new here, I'll give you the general idea of how traders like myself and like, a number of successful traders employ, certain skills to put this information together to be able to succeed. It's not just one thing that you learn, it's a number of things. A lot of people do something called palm oil trading. I don't know if you guys are aware. So in palm oil trading, there's a certain time of the year where it tends to be like the price of palm oil comes down. All right. I don't know if you guys are aware of that. There's a certain time of the year where the prices of palm oil comes down. Now, if you know you're aware about this, or you have a little bit of knowledge about palm oil trading, okay, so I've come to realize that certain individuals make a business out of saving a certain amount of palm oil. So what they do is, when they see that palm oil is going to come down, they buy it in bulk, save it, because at that point the production, the demand, the supply for it is in excess to the demand. But at a later date, the idea is that they go ahead and sell that palm oil. Now, how does a person know that palm oil gets cheap at a particular time? Now, that is that concept. That's one of the first concepts that traders use. It's the notion of using history. The notion of using history to determine the future. So one of the ways in which traders are actually able to do this, okay, Mr. Clement says, is a way of palm oil trading. So trading has now gone to a place where the prices of a particular product can be plotted against time. Okay, so I'm going to share with you guys how this tends to play out. Okay, so let's say, for instance, this is a particular, let me see if I can find a particular asset that looks like this, okay, that looks easy to I want to just show you guys a little bit. I want to get this as practical as possible. So let us say, for instance, let me give you a very simple analogy. So let us say, for instance, you have this particular price being the price of palm oil. This, of course, this is not the price of palm oil. I'm just giving an example. So what trading is about is you're given a chart that shows the behavior of this particular asset over time. Now, if you are able to study the price of this particular asset, you can find out when it gets to a particular price, it tends to fall, and when it gets to another price, it tends to rise. So when it gets to a particular price, it tends to fall, and when it gets to another price, hopefully it tends to rise. Now, the idea of it is not quite as simple as this, but the concept of it is very similar. The idea that you can take history, the historical behavior and performance of a particular product, of a particular asset, and use that history. If you understand how to properly use that history, you can come to a point where you know to a high degree of accuracy, to a much higher than average degree of accuracy, that this particular asset is going to rise. Now, that, guys, is what is known as technical analysis. Okay, some of you might have heard about technical analysis. It's simply you take the price of a particular asset, you use certain tools to analyze whether that particular asset is set to rise or fall. Now, as a matter of fact, guys, you can do this for a number of assets. You can do this for stocks, you can do this for commodities, you can do this for even Bitcoin. Okay, so I can hear now. This is another comment. This chart looks to me confusing. How does a novice like me understand this? Now, the truth of the matter is that once you begin to go through a class, a mentorship class, like what we have here right now, this particular class is going to be for 3 days. You will begin to understand how you can use that chart to tell you the price, the likelihood of the price of a particular asset rising or falling. Now, the truth of the matter is you don't have to get this right all the time. But the truth of the matter is you also don't need to get this right all the time. If you were to do an analysis, let's say 10, and you had like 10 trades, it will interest you to know that even if you had 4 or 5 of those trades profitable, that will more than be enough for you to make money during a particular period. And I'm going to see if I can share how that is so with you guys. But the summary of what I'm trying to explain here is you don't have to know the totality of it. Okay? You don't have to know the totality of it. What is most important for you is to understand, okay, what exactly you're doing over time. So here's what I'm going to do. I'm going to give you a roadmap to trading success. How do you become successful as a trader? I'm going to share with you how you can become successful as a trader. What is your roadmap to trading success? And this, you're taking this from the experience of someone who has actually been able to do this. The first thing you want to do is to prioritize learning and practice. Now, for those of you who got the video to this you got my introductory video, I shared with you how you can download a practice account. Now, the purpose of that practice account is to allow you to trade and practice your knowledge without any form of risk. So you are not taking any risk whatsoever. You just basically, you learn. The money in the account that you are trading is not real. I sent a link on how you can download that particular the trading platform and all of that. So this is what you need to do. First of all, you need to prioritize learning and practice. Then next, you need to have a good trading strategy. What is a trading strategy? A trading strategy is the totality of how you know that a particular asset is ready to rise or fall. How you know that you should probably not be trading certain particular assets. A good trading strategy helps you determine which particular assets have the highest form of opportunity. Now, you need to apply that, but of course, how do you do that? You need to learn. Next, you learn to manage volatility and volume risk. Now, these two risks are the most critical of risk in trading. When you have volatility risk, basically means changes in the price of a particular asset. So Bitcoin, for instance, is a classic example of a highly volatile asset. Okay, because of the speed at which its price changes. Anybody who has ever traded cryptos, for instance, you understand that, hey, the volatility in Bitcoin, as an example, very high. How do you manage that risk and take opportunity? Another risk that you have to manage is the volume risk. Okay, I'll give an example. Somebody who buys Bitcoin who buys like 50,000 naira worth of Bitcoin is not the same thing as somebody who buys like 5 million naira worth of Bitcoin. When you buy 50,000 naira as an example worth of Bitcoin, that's in and around $100 right now. 5 million is about $10,000. Now, what does that mean? What that means is that if you're going to make money, let's say for instance the price of Bitcoin rises from 20%. The person who has 50,000 naira will grow his account or that capital to like 60,000 naira. That's 20%, correct? The person who has 5 million will instead grow with 1 million. He will now have 6 million. The difference between both of them is what you call volume. One has a lower volume than the other. Now, when you are trading, volume allows you to increase your profitability, but it also increases your risk. So one of the key things that a trader should also know how to manage, aside managing the volatility risk, is managing the volume risk. How do you appropriate volume to buying or selling a particular asset? Now, I'm just explaining this in general terms. The next thing you want to do is to get a mentor and a trading community. The truth of the matter is that it will be very, very difficult for you to succeed in trading by yourself. Now, I'm not saying people don't do it, but I'm just looking at the failure rate, the rate at which people fail when they are dancing around trying, stuff by themselves is much higher than if you actually had a trading mentor and, most importantly, a trading community, a group of people who do something similar to what you're doing. People who have made mistakes you likely would starting to make at the beginning. I have people who take some of our courses and go through our mentorship, where I share about strategies that they might even be thinking about trying to employ. And I'll already tell you from the beginning, to be honest with you, I don't think that this particular strategy is going to work. I got to be honest with you, because we've tried this stuff a lot. This type of strategy doesn't tend to work. And then you also learn from the experience of people who have seen that, oh, certain things don't tend to work, so they've started doing something else. That's going to be very helpful for you. So from the very beginning, you want to use a journal to start to track your project, your progress. What is a journal? Let's say, for instance, you're getting started with trading right now. You've downloaded your demo account. You're getting started with trading. What you want to do is you want to have a journal, even when you're practicing. Every single trade that you place, you record it. Why did I place this trade? All of that. We give journal templates that help it become very easy for you to monitor those trades that you go on. Why did I place it? What strategy did I use? What volume did I use? On and on like that. So you get a trading journal from the very beginning. With that particular trading journal, you can improve on your trading performance. One of the things I like to say the most when it comes to trading is, what you don't measure, you cannot improve. This is true for trading as it is true for any other thing in life. If you want to improve your productivity, measure your current productivity. If you want to improve your financial discipline, or you want to improve on your expenditure, measure your expenditure. How can you improve on an expenditure regime that you don't measure? So journals become very important. I will share how those are. Now, of course, in order for you to access the financial market, you're going to need to have a broker. So trading now has gone online. Okay, brokers allow buyers and sellers to connect using trading platforms. So the broker is going to allow for buyers and sellers to connect to the financial market. Okay, you can set up a broker account, a demo account, and there's already been a link. Whoever it is you're getting this from, whether you've seen us on Telegram channel, or if you check your email, I'm sure that you have an email that was sent to you from Swavely Market that shares with you how you can do that. Basically, when you click on this link, it takes you to the broker's platform, where you can actually go on and download a demo account. When you download a demo account, you are now set to begin trading. You are set to begin practicing, okay, how to trade. I always recommend that people should spend some time on the demo, practicing. First of all, it allows you to be very familiar with the trading platform. Okay, it allows you to also get familiar with how the market works. So as you're on the demo, taking trading, on and on like that, it helps you to become very, very familiar with everything. Okay, so I'm going to stop sharing for a little bit so I can see if we have additional comments in here. So I can see here. Okay, so all right. So all right. So if you have any questions as we're going along, you can just put up those comments as we go along, and then we will very shortly we'll be running up, because this session is supposed to actually be for about an hour. We'll be running up. But I'll give you a I'll go back to my slide right now and just give you a very, very quick snapshot of one of the reasons why I think that so many people are struggling. So, but before we do that, let's take a close look at Forex as assets. So you have two currencies are involved in a transaction. It's called a currency pair. When you look on the trading platform, you're going to find a number of currency pairs. The way they look is you're going to have a base currency and a quote currency. So that base currency can be a currency of any country in the world, while the quote currency is the currency of another country in the world. Now, when you are using the trading platform, if you are buying, if you click on the buy, basically you're anticipating that the base currency will rise relative to the quote currencies. So if you're able to do your technical analysis properly, if you click on the buy, you're basically anticipating a rise. And once you've done that, once that particular asset rises in that favor, you're automatically profitable. However, if you click on the sell, you are anticipating that the quote currency, that's the USD in this particular example, will actually fall, will actually rise relative to the base currency. So if you're looking at your analysis and you get a notification or a signal from the analysis that the USD is set to rise relative to the euro, you don't buy, instead you sell this particular pair. Okay, so let's take a look at how that usually looks like on a chart, for instance. So on a chart, you can have say, for instance, you can have on a chart, you can have a number of asset classes, a number of currency pairs. You can, several tens of currency pairs. You will be able to use the buy and sell orders to choose which particular asset you want to profit from when it rises or falls. So I'm going to quickly share a screen and show you what that could look like. So here on this side, this part is called the market watch. Okay, so when you scroll up and down, you find a number of different assets. If you've downloaded your demo account, just for the sake of practicing, you would be able to scroll down through all of these different assets. As you can see here, you have Great Britain pound versus dollar. Okay, if you just double click on it, it gives you a buy and a sell button. Now, I will be able to go into the details of how you use this shortly, especially when we're able to get into the classes. Okay, but basically, you can use this buy and sell orders. If you click on the buy and this particular asset rises, okay, for instance, this is the pounds USD. If you click on the buy, and what you now have is that this particular asset rises. Okay, let's say this happens. If you click on buy, you automatically begin to add some more money into your balance. So in trading, you have to have some balance in the account, whether this is your real money or for the sake of practice. Okay, in your demo account, you're actually going to be giving some practice money. So in this example, if you had, say, with this example, 5,000 whatever dollars, if you double click on this and you click on buy, what happens is as this particular asset rises, this capital here begins to increase. Okay, but if you come to an understanding of like a different particular asset, you have a different asset. If you double click on this particular asset here, and you click on sell, okay, let's say for instance you see an opportunity that this particular asset can fall in price. If you double click on it and you click on sell, as this particular asset falls in price, more capital gets to be added, more money gets to be added to your existing capital. This is just the graphical representation of how this works. So traders want to actually have the skill to know whether this particular asset is to rise or fall. And it's a very it's a range of information that you put together to be able to succeed at knowing this particular information. All right, guys. So I can see here, James is saying, sir, my problem is a good mentor that has good knowledge that can boost my trade, boost my confidence in trading profitably. This is actually supposed to be the number one thing that anybody, before you even get into the market, you say you want to buy, start trading, find a mentor, find somebody who has experience. And one of the reasons why we created this particular platform is to help people be able to do that. So in this early trading course, for instance, we have this course today, we have it tomorrow, and then we have it on Monday. The reason why we are having the last session on Monday is because we want to test out some trades. We want to, some of the strategies that we are, going to share. We'll go through the basics, the platform, a lot of those things. Then we'll now get to the point where we want to actually share. We want to test out a strategy on, share how a particular strategy can be used. And for us to do that, we need the market to be open. For those of you who are new, it's important for you to know that the currency markets are open from Mondays to Fridays and closed on the weekends. Actually, they open on Sunday night about 10 or 11 a.m. depending. Okay, and actually close on the weekends. So we actually want the last training to come on Monday so that we can use live market prices. What that means is that we can actually place buy and sell and see how that begins to influence and affect the profitability that we have. Okay, so somebody here is asking, please, what is PMI? Okay, I was going to, first of all, it's important that we should let us understand what the different platforms that Swably allows you to learn from. So this is called the early trading course. This early trading course, it will last for 3 days. It's a great foundation for you if you've never traded before. So it's try to ensure that you have the time to you have the time to be on board, to be with us, ask questions. Just the same way I'm seeing a number of questions coming through. This is the basics of it. Then after that, we have an online course called the Requisite Trading Course. Now, this Requisite Trading Course, you need to be a registered member of swablymarkets.com. After being a registered member of swablymarkets.com, you need to have purchased that particular course. That course is it has over 68 lessons, okay, that you learn covering different aspects, different it's actually significantly discounted at 20,000 naira. Now that course, you have it for life. Like, we have built a technology that allows you to watch this over and over and over again. And we also have a community that supports that, because hey, if you have questions, there's a particular community where you basically just drop your so I'm going to share a screen now just to see if I can show you guys very shortly what that particular platform will look like. Okay, so but before you even begin to talk about going into the early trading course, going into the Requisite Trading course that has all of those many lessons, if I were you, the first thing I want to do is to spend my time on this particular course. So I want to spend my time on this particular course, okay, this early trading course. Today is just generally like an introduction. So to that extent, we might not be able to, go into the totality of everything that we have. But basically, if you spend time in here, I'm sure that you will be able to get to a point where everything just slowly starts to get very, very, very clear. Okay, so for existing traders, there are a number of people here who have been trading before. I just want to leave you with a couple of tips. I will leave you with these tips, and I hope that you can take these tips to go back and improve on your trading performance. Okay, and even if you're new and you are here and you're listening to us, you should still be able to find some level of application on this. So to be successful in trading, one of the first things that existing traders, people who have been trading, you must learn to manage your emotions. Okay, you must learn to manage your emotions. You don't just buy and sell as you see the prices change. You have to have a strategy, and you have to have the discipline to follow that strategy. Okay, that's very, very important. Another thing you have to do is you must quantify risk on all trades and keep it minimal. One of the beauty of trading is that you have the ability to manage risk. So there's no anybody who tells you, oh, somebody just woke up and he lost all his money, you already know that that person is doing something wrong. That person did something. In fact, I'll dare say that person did something fatally wrong to be able to get to the point where you lose your entire trading capital. So you hear all those stories, people talk about those stories, but you find that it's really when you can control your volume, you can control the price at which you exit a particular trade. You should never have to endure the sadness of waking up and saying, oh, I lost all my money. Every single trade that you place, you can keep the risk at a particular percentage of the account. So if, as an example, I'm a trader now and I have like $1,000 in my account, and I want to take good opportunities based on strategy, I will protect myself that even if this opportunity doesn't go as planned, the maximum risk that I would take will not exceed like maybe 1% of my account. The question here is, if trading allows people to do that, why do a number of people still struggle with management of their account? Clearly, it's like a case of a car that has a brake and people don't use the brake. The ultimate end of such a car is that it's going to crash. You understand what I'm saying? Another thing is stay consistent. Use the 30 sample rule. Too many people flicker from strategy to strategy. Too many people. So you have some people coming to the market and they have a particular idea of a particular strategy. Before they even test the strategy, they are on to the next one. The 30 sample rule pretty much means that before you begin to think about changing how you trade, you should have placed minimum of 30 trades on that particular account. And those 30 trades should be documented so that you can now begin to learn from the outcomes of those trades. Have a trade plan and trade it with discipline. These are just some tools. So even if you're an existing trader, you're struggling with a couple of things, you want to make sure that you get these things and you get them well. Have a trade plan. What is a trade plan? What really is a trade plan? A trade plan determines the outcomes, the possible outcomes, positive or negative, of a particular trade beforehand. A trade plan informs you as to what counts for a good opportunity for you, how you're going to manage risk, the totality of everything you are doing. It's like somebody who's going into war with a strategy. Or for somebody who doesn't have, it's like somebody who's going to war without a strategy. So successful traders, you sit down, you look at all those assets that can give you money. Okay, you begin to plan. You have a plan around those assets. You have a plan around the strategy. Use a trading journal. Again, back to the point of what you don't measure, you cannot improve. How can you improve what you don't measure? If you want to have a fractional increase in your profitability when you're trading, then one of the things you want to do, measure your existing trades. You should also get skilled at strategy, test, and optimization. First things first, this also goes into measurement. This thing about testing strategies and all that, okay, there's something called back test and forward test. Okay, back test, you test out a strategy and say, look, if I've been buying and selling with this particular strategy in the past, how much money would I have likely made? Or what would have been the likely performance of my trade? Optimization comes when you have started, you have started gathering data about the performance of a particular strategy. Okay, so if you gather data through your journaling, through your entries, then what will happen is you begin to tweak a couple of things to see how it better performs. Okay, we'll get into this a little bit. I don't want to sort of overwhelm you with this. Build a trading habit consistent to your reality, and we'll talk a lot about this. So I'll give you a quick example of what a trade account planning might look like. You have things like your maximum risk per trade, per multiple trade, per period, per total lifetime. Do you know what maximum risk per trade is? It means that if you're taking any trade, as a percentage of your account, maybe not more than 2%. Per multiple trades, like you have 1 or 2 or 3 trades running concurrently, not more than 4%. This is an example. You can tweak this as need be. Then you have other things here, such as win per trade. This you get as a function of data. When you started placing trades and you're seeing that data, you can get a sense of your win per trade. You have a targeted return on investment. This is a target which is for the purpose of modeling. You don't have to absolutely have it. Okay, it's not the same thing as saying I want to make $50 per day or I want to make $100 per day. It's not the same thing. Okay, this is like a model. Okay, on and on like that. So basically, you can see that if you want to succeed in trading, it requires you to plan things out. You don't just go into trading without planning. And it's important for you, when you are planning, to make sure that you have the right kind of mentor, okay? The right kind of mentor who helps you in that journey. So I'm going to stop very quickly right now to just see if we have 1 or 2 questions here. If there's any question here, I'll just stop very briefly to see if we have any question. Okay, before I continue. So basically, these tools share with you why these things are important. But I'm going to share with you very quickly something that a lot of traders don't tend to understand. And it's about understanding the big picture of trading. So a lot of traders who listen to me probably think that, okay, if I have a good strategy, if I know how to buy or sell, it means that I'm going to make money every single time. The reality is, no, you're not going to make money every single time. Nobody makes money every single time. But the reality is, when you aggregate profit and losses as a good trader, you should be consistently profitable over time. Okay, so having that mindset allows you to trade for the long haul. Look at these two traders, for instance. We have two traders here who each have, I think it's about 9 trades. 1, 2, 3, 4, 5, 6, 7, 8. About 9 trades. The first trader has a number of winning trades, about 8 of them. While the other trader has, you can see a number of reds here. This other trader has only 2 winning trades and he has 7 losing trades. So one trader has 8 winning trades, 1 losing trade. The other trader has 2 winning trades and the rest 7. Which of these traders would you like to be? At a glance, most people will say, okay, well, I want to be the first trader. That's before you look at it very carefully. Or at least I win. Okay? But when you do the maths, when you do the outcome, this guy truly won 8 trades and lost 1. But his trade result in terms of the outcome on his account was now that overall, he actually lost $200. But this other guy who only won 2 out of, I mean, do the math. What is 2 out of 9 trades? That's quite very low. That's maybe not even up to, just slightly above 20%, if I'm not mistaken. That's a 20% win, over just slightly above 20%. Or I think, win ratio. I'm not quite sure what that is, but very small. The absolute trade result at the end of the day is now what? Plus 300. So in spite of having taken a number of losses, because he had big wins, when he still became profitable over time. Now, this is the big picture of trading. The idea is not how many trades you win. It is what your overall profitability looks like. That's why you find some people are so fixated on that particular individual trade. You should not be fixated on the trade. You should be fixated on the process. This is important whether you're a new trader or an old trader. Have the right view, understand the right picture of trading. It's very, very critical. Okay. All right. So I'm just going to basically go into somebody just said losing in a trade, is it a strategy? Oh, that's a funny question. It's not a strategy to lose in a trade. However, losses are inevitable. So you cannot entirely avoid losses when you trade. So, but the ultimate goal is you should make sure that those losses are minimal compared to the overall account size. Okay, so what happens is when you now take your positives and the negatives, the wins and the losses over time, you should be profitable. Let me just quickly talk about the rest of this particular class. So we're going to have this from tomorrow. We will delve a little bit deeper into the details of trading. So from tomorrow, we're going to look at how we can use a demo account to get started. Everyone sets up his demo account. Everyone begins to practice trades, begins to understand fundamental concepts of trading. But for Suavely, if you want to find out about what those courses look like, you can check out our website here. Okay, our website is suavelymarkets.com. I'm going to share with you a link. I'm going to put up a link here so you can check it out and check out some of the courses that are available on the Suavely Markets website, suavelymarkets.com/courses. These courses are very, very rich. And one of the cool things about the courses is that they allow you to join our trading community. You can start asking the right questions. You can start, interfacing with people. But listen, the early trading course is not over. This continues tomorrow, and like I said, on Monday. Goal is to get you brushed up, get you understanding, how you can navigate yourself to be able to succeed, in trading. But if you're looking to explore those courses, you can check out swabimarkets.com/courses. Let me just show you a little bit about what those courses could actually look like. Okay, so when you click on this, first of all, this is the website. When you get to swabimarkets.com, you're going to see this. When you come on the website, you can click on explore. We've done a number of things here. So we have a crash course here, and we have a website trading course, and we have a professional mentorship initiative. Now, the features of these courses are different. So the website trading course now, for instance, it has quite a number of things here. If you scroll through, you see a number of things up in here, quite a number of things that are in here, and so we've got the modules. The first one that talks about the basics of trading, then the next one, all these are videos, by the way. So you click on these are videos. So you go from one step to the other. There are different lessons. Okay, so understanding peak value, understanding this, then you go to brokers, then you go to trading platforms, then you go to market analysis, then you go to mastering technical analysis. It's actually a whole lot. Like, it's essentially like a school. So when you look at the cost of it, it's really like it's over 60% discount actually. Then you look at different strategies and then you look at trade management, on and on like that. A number of resources are in here. Okay, if you are really, really interested, you can find out about it. And one of the cool things about it is that, remember that the early trading course is for 2 days. Some of you might end up being busy during this period and sort of struggling with getting the time and whatnot. The website trading course is going to provide you an expanded amount, over 13 modules in here, and all you have to do is to, get an account with Swavely, okay, and make a purchase for those courses. Then we have the professional mentorship initiative. This is like a premium program because it's literally like one-on-one. This one takes you into 7 weeks of training, 7 weeks. Now that covers a whole lot of things. So typically what happens is we touch base. First of all, well, I should mention that if you get up on the professional mentorship initiative, you get the website trading course as a part for free, as a part of that particular course. Then on the professional mentorship initiative, what happens is that we have our mentors. We have several strategies in 7 weeks. We go into full proper understanding of it. You have resources, you have quite a number of things. You have notes, you have sessions, you have practice sessions, you have shared sessions. Basically, you are one-on-one. So you basically can ask your questions directly. You can run your own charts and let us have a sense of it. You begin to understand really what does trends mean. A lot of people think they understand what trends are. Most traders who trade don't really know what trends are. That's the honest truth. I've come to realize that. But when you actually do this, you begin to understand a lot of these things. And at the end of the day, the goal is for you to become successful as a trader. Okay, guys? So that's basically it. Now, so Mr. Audi is asking, please, which course is better for a beginner? So first of all, let me advise you. What you should do is make the most of this particular course right now. Make sure that you turn up again as you have been here with us. You turn up again tomorrow and you turn up on Monday for the courses. We'll have assignments and sessions through these periods of the courses that allow you to, ask your questions, get better, test things out on your own side. And we'll also give you a number of resources that help you to get started along the way. But at the end of the day, you should know that this is not the totality of your learning. This is not all your learning. Now, this current means by which this broadcast is on is sort of like a one-way broadcast because you cannot share your video, you cannot ask questions outside of through the text bar. But when you are in our full search classes, you're on a two-way video where you can basically ask those questions. That's on the Professional Mentorship Initiative. So it's really fabulous. It's really fabulous. The range of what things to do, really fabulous. But first of all, don't forget, make sure that you get your demo set up. From tomorrow, we will begin to delve into full-time what trading is. First of all, I'd like to thank you guys for standing in here with us for this 1 hour plus. The goal of the early trading course is to show you a pathway into the financial markets. When you're in it, it begins to show you what things that you can do. How do you proceed as a trader? Anywhere you are, from now on, you can say to yourself, hey, I'm going to actually do this. I'm going to take the time. Because listen, it's not about the money for a lot of these courses. It's more than anything, it's the time. Can you find the time to learn something that can be of use to you? If your answer is yes, then we are also here to help you and support you. I'd like to thank you guys. The link for the second session is going to be shared across, and we'll be looking forward to seeing you there. From my side, and on behalf of the team, I'd like to thank you once again for sharing out. Don't forget to check out the courses if you are looking for looking to go beyond this current sessions that we're having. Thanks a lot, guys. Take care of yourself. Have a good evening. Bye from here.